All right, hey, welcome back, everyone. We're going to dive into, is Bitcoin in a super cycle, or is crypto in a super cycle, and what that might mean for your investments long term and also in the short term. My name is Paul Barron. Welcome back to TechPath. Today, joining me is a friend of the channel, and that's Mr. Gareth Soloway, who's joining us as the Chief Market Strategist of In the Money Stocks. Great to have you back.
Thank you for having me, Paul. It's a great pleasure to be back again.
Yeah, Gareth. So we've had you on a couple times to talk about Bitcoin, really on the ascension to its what is now its all-time high, and it's continuing to kind of bump around there, even though we've had a little bit of a slide as our filming right at this moment. Of course, Bitcoin being as volatile as it is. Let's get into the potential of a super cycle, because this is something that a lot of people are really kind of looking at today. I was even following a little bit of Willy Woo's comments on Twitter here recently, and he's as big of a Bitcoin maxi as there is. What are your thoughts on whether or not we break the cycle of the 4-year run and we see normalized market corrections and trading, maybe from here on out? Where do you think that's going to play out?
Yeah, so that's a big question. If we take a look at the chart here on Bitcoin, and I'm pretty much a pure chartist, right? So what I'm
Yep.
seeing here is as of now, we have a beautiful double top. You pierce the all-time high, which just so happens, interestingly enough, to have occurred just as the Bitcoin ETF debuted. So there was a lot of hype in that debut, and that helped push Bitcoin up to make a new high. But immediately it sold back off and came back underneath that high. So whether or not we're in this super cycle is yet to be determined. What I'd
Mhm.
like to see over the next couple days or even weeks is it get above that previous April $65,000 high and actually hold above it. That's very important. So many times the institutions will kind of pierce a high because they know the small investor gets overly bullish and commits to trading on the long side, only to see them rip it back down and kind of take the small investor money. So, what you want to see is the institutions ultimately step out of the way and let Bitcoin stay above 60,000, 65,000 for multiple days. Then I think you can see another leg to the upside. But on a technical basis, it hasn't done that yet. So you have to respect the double top right here until it's broken.
On the double top that you're talking about with Bitcoin, obviously we took some time to get back into a correction and get to that stage. A lot of people had been anticipating it. Obviously, Plan B pretty much called it again within just, I think, $1,000. He's done that maybe 3 or 4 months running here. Your thoughts on it, when you look at stock to flow and what we're seeing in terms of market penetration, all the different scenarios we're seeing in terms of institutions, retail investors. Is there anything that you're seeing in the charts that is giving you any other indicators that we may see a continuation of the bull run itself?
As of now, no. What's concerned me a little bit is that we haven't seen the volume in the upside move. So if you look at the last few days where we've been trending up, the volume hasn't shown accumulation of big players. It's been much more small, light volume buyers that have been lifting it up. And that's a little bit of a concern here. I do think, again, stock to flow you can pay attention to. I'm not a huge believer because I believe the charts really represent all of the encompassing factors. But certainly, it's good to be aware of these other things. And just a little side note, we just were talking as you opened the show about that dip on Bitcoin that occurred just as the Federal Reserve released their FOMC statement and they
Right.
announced tapering of 15 billion. And I just like to point this out because it's a fascinating aspect. The Fed being a little bit more aggressive on tapering, announcing tapering starting in November of 15 billion is
Hmm.
a kind of an anti-inflation, very small anti-inflation move, which goes against Bitcoin. And Bitcoin did see a quick sell-off. Now, Bitcoin's recovering very quickly, but it's interesting to note these kind of connections between what the Fed does and what Bitcoin does.
I was looking at the activity on just active wallets here recently, and this is just, I'll hover over the chart here. Let me kind of zoom out on that because you can kind of see where this is coming from. But here we are on really the end of September, September 30th. Let me zoom in on that so you can kind of see that. It's 77.08 million active wallets. And you continue on down here, and a month later, we've really started to see a little bit of an uptick right here. And this,
Yeah.
of course, has been the last few days in the cycle. Now, the month, the end of October, early November, as we're filming this. So here's my question. When you see those kind, because if you look back here, you see those kind of jumps like this right here, which is back in June of 21. Then these crazy ascension moments, obviously back here in December of last year, we saw most of the kind of movement that we've seen in terms of just new investors coming onto the scene. With this kind of acceleration in retail investors moving into the scene, and we have institutions, of course, now, especially with Bitcoin futures ETF. We may see a spot ETF soon. We'll get into some of that. Is there any implication, or I should say, indication that you're seeing in terms of the volume of investors that are coming into the place market that could identify any kind of quick move to match what Plan B is kind of pointing to, which is really the 100 to 135, 138K mark by end of December?
So I think it's an interesting correlation because you could also say that Plan B has gotten such a big following that I bet he's partially responsible for the increased wallets to some extent, maybe a minor
Yeah.
extent, but it's just interesting. But I think also you have to look at the price action, right? When does the retail investor usually get in the trades? Well, when there's the most hype. What has
Yep.
happened recently, right? We've seen the ETF debut. We've seen a new all-time high. So I think that explains it more than anything, why you've seen that upping in the wallets. I guess my bigger question, if we have, and I don't have this data in front of me, but is what's the value in those wallets? Have we seen the amount or dollar value of Bitcoins that are being held go up? Because that would mean something to me. If someone's opening a wallet and buying $100 of Bitcoin, that's obviously not an institutional player or a big money player. Now, if you have $1 million going into the Bitcoin, that's a little bit more important to me.
Yeah, we actually had some of that data. I don't have it in front of me either, but one thing that we really track here is the sentiment and amplification. It's our indice that we kind of lay over the charts. We match them up based on the sentiment control around price points. So we've been able to kind of basically build just a small algorithm to give us a high-low kind of scenario for the indice. The cool thing is that with Bitcoin, and I'll jump to my chart quickly, and this is something that we pulled in the last down cycle of a sentiment, which was on, looks like 22nd of October. This had the sentiment, which had also risen again at 78.91, but amplification actually dropped right here. And you'll notice if the last time we scored it was over here, which was back in, looks like September 27th, so about 30 days or so before. But it had dropped. Now, amplification, this is kind of the water cooler effect, is the way we explain it. And much like when you look and analyze stocks, it's kind of like what's happening with Tesla right now. You get that water cooler effect, you get the FOMO coming in on retail investors, and then at some point, we're going to see institutions really start to move in terms of big plays. What are the things you watch for in the charts? Whether you throw, I mean, we use Market Cipher and a lot of other kind of tools from a TA side, but what do you use to really identify when you think a market drop is going to happen or a
So,
correction?
so yeah, so that's a great question. So a couple of the things I look for, like when you number one with Bitcoin, sentiment is very, very important. When you see maximum bullishness, and I look at a couple different indicators for kind of sentiment, and that's
Hmm.
definitely something. For me on Twitter, it can be like, if God forbid I say Twitter's into resistance and I get 1,000 comments telling me I'm crazy, that's something that'll perk my say, okay, now I'm actually more bearish on a pullback. And that can go for
Yeah.
the bullish side too. If you're bullish and you get a lot of bearish comments, you can also do that. Now on charts, it's basically looking for the same type of stuff as I'd look for in a stock chart. Topping tails, reversal candles, heavy volume reversals, which can signal sort of
Hmm.
institutional dumping. I think those are the types of things you want to look for on Bitcoin. Bitcoin, because you can trade in very small percentages, technically has a lot of volume. If you divide it up into 0.001 Bitcoin or whatnot. So I think that's important to recognize as well. So for instance, just looking at this chart on Bitcoin, one of the things I actually shorted Bitcoin when it pierced the high because I was banking on the fact that the hype into the ETF would bring it down. And I was also noticing that there was no confirmation. And just to quickly explain what confirmation is, when you break above a high, there's a tendency for institutions to fool small investors and then bring it right back in.
Right.
They do this because they know small investors will buy the breakout. What I look for to tell me it's a real breakout versus a fake breakout is you get a close above that high, and you need a secondary candle to close above the highest point of that first breakout candle. And essentially what that does is it tells you that the institutions aren't playing games here. The reason it tells you institutions aren't playing games is because they would have to be committing too much money to that play to reverse it at that point
I
to make
see.
it worth
Okay.
their while. So there are little techniques that I utilize that are kind of, in a way I came up with the confirmation signal that have made it unbelievably accurate for me to kind of dictate whether or not something is really breaking out or is it a fake out. So for instance, I'll be watching Bitcoin in the next few days. If it gets above 65,000 and then confirms, then in my opinion, it's going to 75,000 at that point.
Yeah.
As long as it stays below, Bitcoin is still risky in terms of a double top. You still have the 4-year cycle. 2009 it started, 2013 high, 2017 high, and here we are in 2021. So you still run that risk of still being in the cycle kind of, that we've seen in the past.
Yeah, and that's why, we wanted to get you on today, because we felt like this is a really critical time for
It is.
Bitcoin right now of what we're seeing, because it is bouncing off that all-time high. We've seen sentiment. What kind of shocked me was when we saw the amplification drop, because typically when we see amplification slide from a previous recorded data set that we've looked at that's very close, whether it's within 2 weeks, 3 weeks, the concern I have always on a major project like this with Bitcoin is that when we see amplification down, but sentiment going up, that's when I get really a little bit cautious, because it usually indicates we're going to see some sideways action, or like you're anticipating, a potential correction that could go. If we do see it kind of crack through, that's a different scenario, because right now we're probably going to be able to pull another sentiment analysis on this little bit of a dip right there.